Tanya van Lill, the Chief Executive Officer of SAVCA, which is the Southern African Venture Capital and Private Equity Association. And I've known Tanya for some time, since her Gibbs days. She's very passionate about the growth of the private equity and venture capital industry, given the positive impact that can be realized by investee companies, and advocates for increased investment to the PE VC asset class, the African continent, and obviously for the ecosystem to be more supportive of entrepreneurs. Tanya, great to have you, and over to you.
Thank you, Michael. It's always great to be here and great to talk about the private equity and venture capital industry and really just giving you a snapshot of the industry. And it's great following on from Calon, and that I'm hoping that I can also dispel the myths that we're venture capital or vulture capitals. But before I get into some of the insights and the data and the statistics, I really just wanted to make sure that everyone understands where venture capital and private equity fits in. And as an entrepreneur embarks on their journey, there's different types of risks that they'll experience, but there's also different types of funding that they will need as they progress and as their business grows or scales. And where venture capital comes in is really at the early stages of an entrepreneur's journey, when they need startup or seed capital really to get their business off the ground and need a lot of support in terms of how do you grow and scale a business. And then as they mature, private equity would then become a possible funding mechanism, because private equity invests in more stable growth-sized businesses, but also write bigger investment checks than venture capital. So I just wanted to make sure that from a venture capital, private equity perspective, they both invest in privately held companies, but they do so at different stages of a company's life cycle. But in terms of the private equity industry itself, what we've seen is what private equity firms are focusing on and where their particular areas of speciality lie is in investing in companies and helping these companies grow. But as an organization, they too face challenges. And some of their top priorities, based on the challenges they've faced the last 2 years as a result of the pandemic, is really about fundraising and asset growth. So on the left, you'll see private equity challenges and priorities from South Africa. And on the right, it compares to priorities and challenges across the world from the EY Global Survey. So although asset growth is top for the international sector, locally we see that it's very difficult for local private equity sector to actually raise funds. So what steps have private equity taken to prepare their portfolio companies for downturn? And a lot of the companies that they've worked with, it was about keeping the lights on, looking at working capital, measuring their runway in terms of the cash that they had available, and then strategizing and pivoting where needed, and also renegotiating contracts, whether that be with landlords or suppliers, etc. So there was a lot of hand-holding, a lot of intense value creation for the industry. And what we can see here, that it was a lot about optimizing working capital, it was about finding new revenue sources, and also looking at the risks and trying to plot what might happen or may happen. But we also asked our private equity firms, do they expect their operating models to transform in the next 3 years? And we asked for their portfolio companies, for them, and we compared it to the global EY survey. And what we saw is that for a lot of them, they're still going to conduct business as usual. But they do expect, 78% in private equity expect that there'll be some form of adaptation to their operating model. And what we've seen is that for a lot of them, they say they're actually reviewing what they do, how they do it. And the pandemic has really opened their eyes in terms of some of the risks, innate risks, and also opportunities in the industry based on changing consumer behavior. So what were the value of the funds raised in the private equity industry? So from our survey, you can see that we were surprised to see that in 2020, at the onset of the pandemic, that so much funds were actually raised. We anticipated a far lower rate of funding or fundraising in terms of the impact of the pandemic. So we could see 16.9 billion rand was still raised in 2020. We anticipate the number in 2021 to have been similar, and we will have those results out soon. But it was good to see that despite everything that was going on, the industry was still able to raise funds and attract money from institutional investors. But we always ask, where do these funds come from? And we broke it down from sources of funding in South Africa as well as outside South Africa. And interestingly, the past 5 years, we saw a lot of funds coming from outside of South Africa. So it used to be sort of in the 50% range, coming from within South Africa, coming from outside South Africa. But what we're seeing now is a big turn, that most of the funds raised actually emanated from within South Africa. And interestingly, it came from local pension funds. So we can definitely see there's a bigger appetite for local pension funds to start investing into private equity. You may also want to know which sectors received most of private equity's investment in 2020. And unsurprisingly, we saw a big investment in infrastructure. But it's not only infrastructure in the form of roads and bridges, etc. It's also digital infrastructure, hospitals, schools. So there's a lot of points within the investment landscape that do touch on infrastructure. We also saw real estate, services, telecommunications, and energy and related feature within the top 5. And then interesting, what we wanted to show is that other is also just under 10%. And we're very surprised by other, but we feel that the other category is when it doesn't fit within a specific industry, but it touches maybe agriculture and technology, so it's agri-tech, so it won't always capture them correctly. What is top of mind for the private equity industry? So what are people talking about? They're really talking about the regulatory landscape. There's so many changes in the regulatory landscape that affect how they do business, where they do business, etc. So a lot of talk about changes to Regulation 28, changes to the COFI bill. So there's definitely a lot of regulatory changes that will affect the industry going forward. Also infrastructure, again, a lot of it related to Regulation 28 pending changes, but we're seeing a lot of appetite for infrastructure investment, not only in South Africa, but also international investors wanting to invest on the African continent. The exit environment, it really depends on the health of the market and whether there's growth in the market. So the exit environment has slowed down considerably. So this is definitely something that's top of mind for a lot of our fund managers that are at the point where they now have to realize investments. A lot of them delayed realizing investments as a result of the pandemic and just poor market conditions. We did see some exits, not as much as we would have seen in previous years. So there's definitely a need for more exit activity in the next 18 to 24 months. There's also big discussions about ESG and impact, and South Africa, having been receiving a lot of development finance institution money from European and American DFIs, have traditionally performed much better from an ESG and impact perspective than our more developed markets and counterparts in the US and Europe. So they're accustomed to receiving DFI money, which is related to ESG and impact investing. But the question is, with so many investors wanting to see different reporting and mechanisms, how do you harmonize, how do you report, how do you make that function internally more efficient, but also report back to what your investors are looking for? Creating value. That's the essence of private equity. It's about investing in companies that can grow, where they can create value. So at the end of the day, the company is in a much better position from a financial perspective, from a job creation perspective, from the actual products that it offers, so that when they do realize that exit or that investment, the performance is higher than what they actually bought it for. And then co-investments. We're seeing a lot of co-investments, specifically again from the development finance institutions, and these co-investments link a lot to what their investment mandates are. So it might be climate, it might be gender, it might be agriculture, but we're seeing the need for the DFIs to do a lot of co-investments with fund managers. So it comes down to the nuts and bolts. How do you do it? How do you negotiate? What do those contracts and terms look like? So a lot of discussion about how do you actually make it work and make it happen. That was a little bit of a snapshot about the private equity industry. What are some of the venture capital insights and what we're seeing? We're definitely seeing growth in this industry. It's still a very nascent industry. It's not as mature as private equity. It's not as big as private equity. But there's a lot of appetite to invest in early stage companies, and especially seeing the great innovations and quality of entrepreneurs that come from South Africa. So just over 1.3 billion was invested in 122 entities through 167 funding rounds. So some entities received more than one investment round. There's also been an increase in exits, which is really good for the venture capital industry, because as the industry is still proving its mettle, it needs those exits to show that you can make a good return, even in a more riskier asset class. We also saw that from the number of investments year on year since 2016, it has grown. So definitely a lot of appetite, a lot more interest in the venture capital industry. What are the sectors that venture capital invest in? A lot of it relates to software, business software. We saw a big uptick in fintech, so that's definitely an area that's receiving a lot of attention. But South Africa being a B2B or business-to-business market, you can see a lot of the sectors that are receiving venture capital money are those that serve the business-to-business market, although there are some really good business-to-consumer startups out there. From investment, so what you see on the left is number of investments and which sectors received most in terms of number of investments. But the sector that received most in terms of value investments was actually the agri-tech sector. In terms of VC investments, I just wanted to highlight this. So this is not a SAVCA survey or a SAVCA result. This is from Disrupt Africa, and they launched it a week ago. And this just looks at what's happening at the venture capital industry on the continent. And what we can see is there's been exponential growth from 2020 to 2021 in terms of the money that's being invested on the African continent in these early stage startups. And a lot of it has to do with giving people access to products and services they wouldn't necessarily have had access to in a more efficient and cost-effective way, but also in light of consumer behavior that was as a result mostly of the pandemic, and how people shop, where they shop, how they make decisions, access they want and need, a lack of mobility and needing things to come to you rather than you going to it. We also see on the right-hand side that South Africa was listed fourth in terms of, at the time of the investments made, 2,400 jobs of the startups that received investment. And what we've seen on average, between 22 and 24% growth in jobs for startups that receive investment. So that 2,400 figure seems small for 1 year, but if you multiply that and use that multiplier effect based on the growth of these startups, there's really an opportunity for more job creation and more job opportunities.
Tanya, if I can just interrupt, if you could wrap up the end of this, because we are running out of time.
Sure. So quickly, what the industry is talking about, very similar to the private equity industry. Fundraising, what's interesting is the role of corporates, because corporates can also be funders, they can be co-investors, but they can also be customers. So really, where do corporates play a role in the venture capital sector? Also, again, regulatory environment, a lot more collaboration that we're seeing in the VC industry. I think because it's still so small and nascent and everyone wants to see it grow. There's a lot of sharing of templates and documents and investments, etc. So a lot more collaboration. And then access to talent, not just for the VC industry itself, for the companies that they invest in. The investee companies find it difficult to find the right technical skills to help the companies grow.
Well, Tanya van Lill, CEO of the Southern Africa Venture Capital Association and Private Equity Association. It's always a mouthful saying that, so SAVCA. I think it's been great having you present at the conference, and clearly as an organisation, as an industry body, doing a lot to promote and grow and help the regulators understand the asset class. Well, that's a wrap from the alternative marketplace. It's been fantastic bringing you all of the speakers, 8 power-packed presentations from the continent's top alternative asset managers. managers. We've had Zafira, Laurium, Geltec, Digital Investments, Investec, 361. We've also had Geltec Fund Managers, Kalon, and the Industry Association, SAVCA. Remember, if you've asked a question in the chat box that we haven't got to, well, we're going to email you and we'll send you a full answer. And also, if you want us to schedule a meeting, just go onto the website. It's altmarketplace.co.za. You can schedule a meeting on the website with any of the presenters today. Just go and click on the presenter icon and you can ensure that you get to speak to them about your portfolio, your asset allocation, or perhaps just find out a little bit more about their area of specialization. There's just so much to digest from all of that. But if there's one take-home message for me, and it's probably one of the best pieces of investing wisdom that I've ever come across, it's diversification. And no, it's not a small wooden ship. It's the only free lunch in investing. So any well-diversified portfolio should have a healthy allocation to alternatives, and you'll be hard-pressed to find better entry points than through one of our presenters today. From me, Michael Avery, and the rest of the Business Day TV and Arena Events team, thank you so much for tuning in, for streaming, wherever you are. Goodbye and take care.